So I wanted to talk a bit about the mood of investors on this show because I often get asked by the BNNs, the CP24s of the world, Reuters or Canadian Press. I'm fortunate enough to be interviewed by them as well, and they always like to ask me this question: what is the mood of your investors or investors in general that you're speaking to? And I think to start this year, the mood of investors is a lot more positive than it was 1 year ago. As I mentioned, coming into 2023, the market was at lows. Coming into 2024, market is at highs. Now, for a money manager or investment advisor like myself, coming in at a high note makes things a lot more difficult. As I said earlier in the show, trickier to invest than if things come on the low end, because you always want to buy low to eventually sell high. And if you're buying it at a high, you're obviously predicting or hoping that things go even higher. So I guess investors in general, because things are at high points right now, I think the mood is pretty good. I think based on where interest rates are headed, where I guess what people are predicting will happen with interest rates, I think this is causing a lot of investors to be in a better mood. A better mood because their debts, hopefully the interest on their debt will come down this year. Hopefully they'll be able to borrow money at cheaper rates. And hopefully as interest rates fall, stock market picks up, whether it's in the first quarter or throughout the year. I don't know exactly when interest rates will fall, but it looks to be a positive year. And many people believe and are calling for a positive year, both in the stock market and in the bond market. One of the charts we have here, first chart, volatility chart, you'll notice here that bonds and stock and equities, and for a while there, I guess back 2021, equities were a lot more volatile. You see the spike in the equity line there. But recently, the bond market has been volatile. Why? Because as interest rates go up, bond price comes down. And so what we saw over the last couple of years is a higher interest rates, and we've seen bond prices really fall. But as many are predicting, interest rates will begin to fall. And we've already seen the 10-year in the US go from 5 to 4%, 10-year government bond, that is. And so what we're seeing is that the bond pricing is starting to rise as interest rates fall. So many investors are actually buying into the bond market, not for the interest necessarily that they're paying, their coupon is paying, but because they're buying these bonds at a very low price and waiting and believing that the bond price will move higher, just like a stock. And at the same time, we're also seeing some volatility in the stock market, not as much according to this chart, but we're seeing volatility in the stock market because, again, interest rates are coming down, stock prices are going up. So usually when stock prices rise, you tend to see volatility or the VIX not as high. Right now we're seeing a VIX somewhere around 12 to 14, which is historically very low. But bonds seem to be a lot more volatile right now, again, because of interest rates falling or rising and then falling very quickly. The second chart that we have here, and this is an interesting chart because this is a moment in time. This is as where the money is flowing this morning. Wanted to get a snapshot as to where things were at this morning when this was taken. Obviously, the stock market has changed since then, but you saw the market, money flowing into the Dow Jones, the S&P 500, the NASDAQ was roughly flat. I can tell you, last time I checked before we came on the air, the NASDAQ and Dow Jones were higher. Markets were in general higher in North America. TSX, we'll see if that holds throughout the afternoon. The VIX was at a low point. There it is, just under 13. So everything seems to be great right now. Money is flowing into the stock market, pushing up some of the tech stocks, some of the pharma stocks, the bank stocks, retail stocks. A lot of the different areas, market breadth is widening out. Everything seems to be going quite well right now. And I think for individual investors, overall, the mood for now is very good. And we're seeing it playing out in the stock market.